To be successful in investing, you have to keep changing your ideas all the time, more than once a year. One of our basic principles, Charlie, in investing is to buy wherever things are the lowest price.
How did you determine bargains?
The lowest in relation to many factors, but the biggest factor is earnings. How low is it in relation to earnings? How low in relation to growth trend? How low in relation to dividends? How low in relation to book value? How low in relation to competitors? Buy me $100 worth of everything below $1 a share. And he did what you just said. He called back and said, we're doing it, but 37 of them are in bankruptcy. And I said, oh no, those are the best of all.
Sir John Templeton is one of the early pioneers of global investing. He founded the Templeton Growth Fund in 1954. It grew into one of the most successful mutual fund groups in international investing. It built its reputation by venturing into uncharted territories and finding bargains that would later reap huge returns. In 1992, he sold his financial empire and devoted himself full-time to philanthropic activities. He has recently written Worldwide Laws of Life, a collection of 200 spiritual principles, and I am pleased to have him on this broadcast, not only to talk about this book, but to talk about a very interesting life and also talk about economics and Wall Street at this time. Welcome, sir.
Thank you, Charlie.
Great to have you here.
My pleasure.
Did you know then what you now preach, the gospel of emerging markets, the gospel of investing overseas? Was that, are you saying, the best initial investment idea you had, that there was money to be made beyond America's boundaries?
No, no. To be successful in investing, you have to keep changing your ideas all the time, more than once a year. The main idea I had back then was that in England, people invested worldwide.
Right.
But in America, they invested 95% in America. And I was going to show them how to invest worldwide.
Came back and started your own company?
No. Well, before coming back, I wrote to the only people who had investment counsel firms in America. There were only 85 on earth. And 12 of them offered me interviews, 3 of them offered me jobs. The one I took turned out to be Merrill Lynch. But then my wife and I decided we'd save 50 cents out of every dollar we earned with the idea of forming our own company. So 4 years later, we formed our own company.
And that was called what, the Templeton Fund or what?
Called Templeton Investment Management.
And you began when to make a lot of money? When did you begin to show the genius that has led you to where you are today? Was it easy
Charlie.
early for you?
Oh, no, no. Everybody has to work hard or should work hard. I was never been bright. I just industrious, I guess is the right word for it.
You were Phi Beta Kappa at Yale and you were a Rhodes Scholar, but you've never been bright.
No, that's correct. That's right. But I've been hard working all the time. Still now. I work hard now at 84.
You say now that you work harder than you ever have in your life before. You're working 7 days a week, you say.
That's correct. I'm the busiest I've ever been, the most enthusiastic I've ever been, most joyful I've ever been, because some of these charity programs are beginning to have a beneficial effect.
I want to get to those, I promise. Okay, but let's stay with the notion of your economic activity.
All right.
World War II came.
Yes.
What did you do during the war?
I already had children, and so I never got drafted, and I stayed in New York and built an investment counsel firm.
Right. And then after the war, in which the great American time came, we were the most powerful country in the world, and it was a post-war, and Europe was rebuilding, and Japan was rebuilding. Where did you begin to spend most of your clients' money?
Oh, all over the world. The real opportunity in those days was Japan, because Japan was just desperately cheap. You could buy things there for 1/10 the price you could buy them in America. And yet, having visited in Japan after Oxford, I knew that it had a great future. So we invested more and more wherever we could find bargains. One of our basic principles, Charlie, in investing is to buy wherever things are the lowest price. And you can only get things at a low price if somebody's selling. Nothing else pushes your share down except other people selling. So people were selling in Japan after the Second World War, and the bargains were there, and we loaded up on them.
Yeah. There's a great story about you, and I just sort of remember it in the back recesses of my mind, where you called up a broker somewhere and said, buy everything on the market.
No, but almost, Charlie.
Almost. And the guy comes back and he says, I bought everything for you, a small number of shares, and all these companies, except those that were bankrupt. Correct. And you call back and said, buy them too?
Yes, right. Correct, Charlie. Gee, you're well informed. when I got my first job after coming back from Oxford, it was with a company that later turned out to be Merrill Lynch, and I worked for a man there named Dick Platt. Right. And then later when I had my own company, Hitler invaded Poland. Right. Well, it was clear, if ever the companies that are worthless and are losing money ever come back to life, it's during a major world war. So a couple of days after Hitler invaded Poland, I looked over all the New York Stock Exchange and the American Stock Exchange. There were 104 companies whose prices had gone down below $1 a share. And so I called up Dick Platt and said, buy me $100 worth of everything below $1 a share. And he did what you just said. He called back and said, we're doing it, but 37 of them are in bankruptcy. And I said, oh no, those are the best of all. The one outstanding one, Charlie, was the $7 preferred stock of Missouri Pacific Railway. It had gotten down to 12 cents a share. Yeah. It hadn't paid dividends in years, but boy, railroads come back in a war. So we bought 800 shares for $100, and when it got up to 40 times what I paid for it, I sold out and went up to 105.
My goodness. Now, when you have, during this period of economic growth and period of the success of Templeton Investments, the philosophy was always to buy bargains.
That's right.
How did you determine bargains?
Lowest in relation to many factors. But the biggest factor is earnings. How low is it in relation to earnings? How low in relation to growth trend? How low in relation to dividends? How low in relation to book value? How low in relation to competitors?
So you would look at comparative numbers, and if most of the companies were selling at 20 times earnings, and you found one that you thought had some quality was selling at 10 times earnings, you'd buy that one.
Yes, well, the differences were much greater than that.
You mean 5 times versus 25 times.